Second question very important. That is the accounting terms. Here, if you try to be look into friends, I have given the three terms where I make a right tick. Three portion I have still not decided. So accounting says that there should be the ownership of work to be done. So accounting is basically based on responsibility. Now I am coming to the one question to you. Someone can answer me. Who is the customer in the healthcare sector? Okay. Any other one have any other view? Who has said the patient? Tell me your name, friend. Okay. You are partly correct, partly wrong. Let us understand. When we say the customer, it means the decision maker. Understand? Okay, in accounting term. Person who take the decision to buy the particular product or service is known as the customer. So in the case of healthcare sector, patient is not the customer. Relatives of the patient is the customer, because the decisions of the treatment is not going to be done by patient. It is going to be done by the relatives, friends, relatives, family members of the patient. So ownership of work is coming to the relative of patient, and that is why you know every medical treatment, the signature is taken before operation. That is what you can say. The consent letter taken by the healthcare sector, not by the patient side, but by the signature of his family member. I think you are recording it. So this is known as ownership of the work. This is the point very clearly you have to understand. That any wrong answer may be niche, decision may be wrong. Second thing, additional service. You provide the additional services. Like when we buy any automobile product, generally 1 or 2 years warranty period is given. It is different story that those warranty charges are being recovered from you. So it is covered under the additional services. Warranty charge. Second, additional services are coming under the form of annual maintenance contract. AMC charges, annual maintenance contract charges. As you know, before the 4 or 5 years ago, or what I recall since last 4 years, the Hyundai, Maruti, those have stopped to take the annual maintenance contract. Previously the annual maintenance contract of those companies were that you pay say 20,000 rupees per annum under annual maintenance contract, then certain number of services are being paid, then wind alignment, wind balancing, something like that thing were coming under fee. But when they try to use the accounting by summarizing the data, they may have come across to the neighbor that under the warranty charges, the expenses paid by them is quite greater than the income they have received, because of the very good quality of road we have in India. Okay, so they have stopped to provide the AMC charges. So additional service, there are certain delivery conditions are coming. Like coming back to that delivery conditions point and how the ownership is transferred. Now grocery shopkeeper is have sent this person, worker, to deliver the 10 kilogram of rice to your home. Now if he come and deliver the 10 kilogram of rice in the proper packing, you are bound to make the payment. Do you agree? But assume that when the grocery shopkeeper worker has started from his grocery shop, but before he reaches to your home, the packet of the sugar, 10 kilogram sugar have been fed down and you have noticed it. Are you supposed to make the payment? Tell me. No, you are going to say that I am not supposed to make the payment because I have not issued it. Because the condition was that the delivery at customer place. Now you take in another words. That you have taken the delivery of 10 kilogram of sugars from the grocery shopkeeper and coming to your home, and on the way it is fed down and lost. Can you go back and ask for the second time that free of cost you give me? No, because what happened? The moment you have took the delivery of the sugar from him, the property right, understand, that the ownership of the goods have been transferred to you. Accounting also privacy. I have not put the thing. Privacy. That is the agreement taken place between the two parties. May not be open. Number of time you come across to the knowledge that some shopkeeper says that, oh, as you are my own customer, I am giving you at a cheaper price. Don't disclose to others. So you know it's known as a privacy time. There is also going to be the certain travel time and expense to happen. Like grocery shopkeeper person coming to your home to give the delivery. Travel time is happen. Recording may record it, may not be recorded. So grocery shopkeeper have the habit that they say that when my person is coming to your home, and if there is a lift in the building, then 30 rupees to be paid. If there is no building, some different amount is to be paid. And then some companies are providing a cup of tea and soap, like a staff canteen. I say some company because I know that the Ahmedabad-based companies don't try to give the 3 times a tea. They give the 2 times a tea only. Okay, so this type of them condition may be happen. So any transactions can be happen. This is already we have done. It should be events or business activity. It is related to your business. That should be the exchange of money is done. It means that we are agreed to pay the rupees 300, or we have made a payment of 300 rupees, or there may be the barter system. Barter system means under the own time, one particular commodity have been exchanged by another commodity. That is known as money's worth. Third, transactions should be done between the parties. And fourth, is change the financial position. Like when you are going to the grocery shopkeeper, in your pocket you have 500 rupees. So you have the cash balance was 500 rupees. Understand this point very clearly, that you have the cash balance was 500 rupees. You have purchased a grocery item, sugar of 300 rupees. So now in your pocket you have 200 rupees and 300 rupees, worth 300 rupees, sugar is there. So the asset in the form of cash have been converted into the asset in the form of sugar, because both are going to be satisfying your objective. So the question is coming, what is the asset? So before the asset, we understand categorically, you must be looking to the very nice design seen by you of a 4 different design. Hello friends, are you in a position to view this PPT or not? Okay, so there are left, and first thing I have shown, See, this is something what I'm coming from the industry view, okay? First, if you try to be see that is a manufactured item, tangible item, means which can be touched by you, seen by you. So this is the parameters is coming to the manufacturer. So manufacturer transfer the cost of goods sold through the business link to the distributor, wholesaler, and that is known as business link. This business link may be happen between manufacturer and distributor, manufacturer and wholesaler, distributor and wholesaler, wholesaler to retailer. This is the transaction have been happen. So here the you and me as a customer is not going. We are going to the organized market and unorganized market. As a customer, we have the two markets. Organized market. When we go to the specific mall, shop in the Ratanpur area, this is the photograph of that area where Neddy's clothes are being shown. There is one possibility that they may be producing also. In the case of the Kutsi item also. So bought and shown or produced and shown. Here the two things can be happen. You know, some of the shopkeepers have been saying that we produce according to your requirement. And this is what we purchase from the hawkers area. Fully unorganized market, not paying a zero tax at all. So they are going to be work out the profit. So that profit is basically known as the income is higher, expense is lower. In the case of NOS, income is lower, expense is higher. So every organization have to make sure that there should be profit or there should be loss. Both things cannot be happen together. But when there is a company like a Reliance Industries Limited are there, in such cases they are having a multiple type of plant products are coming. So plant wise they make the profit and loss account. Product wise they make the profit and loss account. And then the non-profitable product they may stop to do or something like some type of the decision making they are doing it. So whenever it is being done from the macro level, that is the Reliance Industries itself, Reliance Industries Limited financial reasons, Reliance Industries Limited financial reasons are known as the total reasons, which are going to be bifurcated into different categories, like a different type of the product category, different type of the plant level, they work out. So that is known as management decision making. So financial accounting used for management decision, then it is management accounting. Now within a particular product, like you know that when you and me or everyone, that is our normal example, we go to the Saturday and Sunday, majority of the restaurant in evening time, in a peak time of this today. And if you ask the few product like a Sone Batuya or something, they will not take your order. They will say that this product is not sold today. Reason they are knowing that there is going to be the customer occupy the table for the longer period of time, resulted into some of the customer may run away. So there is a loss of probable profit. So what they did, they can count product wise costing. When you go to buy the sandwich of a different category, then each type of the category of sandwich, the prices are being different. So it's covered under the cost accounting. I think you are clear with these three terms, which are being normally used by us. Now, We try to see that then continuously I'm saying asset, our worth, liability. Then we have to understand what is asset. Asset is basically the any resources owned. Owned means having with us. Those are with us. That is known as asset. Like I am using the laptop. So this is the resources owned by me. I am at this moment using somewhere my softball going to be used or using it at this moment. Then it is known as my asset, which is owned by firm. I use the word firm, but I'm giving my individual example. The reason is very clear that Dr. Paisa as an individual separate from Dr. Paisa teacher. This is very important. Reason is that the Dr. Paisa may not be teaching because of some reason. Then his transaction will not be recorded in the books of account. But when at this moment I am teaching you as an accredited teacher, so electricity I am using, resources I am using, that cost is going to be recorded. Individual is separate from his owner. That is known as business entity concept. Business is separate from its owner. And those assets are being used for generating the future profit. Very important point. It generates the future profit of the business. That's the basic objective. So the laptop which I purchased and used by family member for playing the game, then it is not going to be generate the future profit. So in those cases, that particular laptop being an asset, not considered as an asset in the books of account. So there should be the objective to generate the future profit. So this is a very important thing we have to understand. Now as the assets have been going, assets are going to be bifurcated into two categories. Number one, category number one means say with respect to physical existence of the same or no physical existence of the same. Very importantly, physical existence of the same, physical existence of not the same. When there is a book is there, then book is having a physical existence. It can be seen by you, it can be touched by you. You are going to be have the smartphone, which is one type of the plant and machinery, your furniture, land and building, which have the physical existence and seen and touched by you. There are going to be the no physical existence. There are the certain assets for which there is no physical existence. Like I have the copyright of my books. There is no physical existence. But the value is limited by right and anticipated benefit. That is the contract made by me with Oxford with respect to copyright payment, royalty payment. But there is no physical existence. It's a documentary document. It cannot be seen and touched. Document can be touched, but does it exactly indicating my asset? No. So it cannot be seen and touched. Example, goodwill. When we say the goodwill is of three types. Number one, goodwill of place, goodwill of an individual, and third, goodwill of management. Come one by one. Goodwill of place. Like when we say the Ratan Port, Ahmedabad, down city area, which is very famous for Kunut. So if you as an individual have opened the shop, made the opening of the shop today morning only, but by the end of the day, some of the customer may have walked down to your shop and may have purchased the goods from you, because customer coming to the Ranthambore does not looking towards whether this shop is open today or it is open, except you have some personal relationship with some shopkeeper or some shop you are preferring. I'm just saying generally. That is known as goodwill of place. Second is coming to the goodwill of place. Goodwill of person. You must have observed it and you must have seen it. It must have been felt by you that you went to the one of the grocery shopkeeper, and this grocery shop being run by the two brothers are sitting. But if the Mr. X is there, you may go and buy it. But if Mr. Y is being there in the shop, then you are not willing to enter into the shop because you don't like that person, or that person behavior may not be good. So it is known as goodwill of person. Third is known as goodwill of management. Next, some management are known as quantity product management or ethical, moral, systematic goodwill. They have it. Behavior, they have it. But some of the management may be cheater management. Like nowadays, our government of India also says that we should not buy the Chinese product because it is not of up to the particular quantity level also. So this is known as the goodwill of the management. Patent is coming with a technical parameters where some of the microbiologists or someone try to be make some specific type of jobs and get the patent registered in his name, copyright is coming to the musical song. Then literature work, well you can say intellectual work and the literature work, it has been coming, and the trademarks, which is the company's name having trademark. No one can use your name. So assets have been bifurcated. Number one, according to the tangibility, intangibility. In the second way, we are according it with respect to time parameters. Like we can say current assets. So assets have been bifurcated into two ways. Current assets, and in normal word we use the word fixed asset. But now International Financial Reporting Standard have changed the words of fixed asset as the non-current asset globally. Current asset means it is the asset which is going to be realized or intended for sale or consumption in normal operating cycle to be realized. Let us understand. Furniture shopkeeper purchase the furniture. What is the intention? Intention is to sell it. So it is going to be realized. Intended for sale. Irwin Limited purchase the cotton raw material, then it is used intended for consumption in normal operating cycle to convert those raw material color or the cotton in the raw form into the cloth. So it is current assets. Now first I am coming to be realized. Now where the operating cycle may not come. Just take the example Anil Bakay Limited. One of the famous, one time famous, so I don't know whether what is his status today, famous construction company of Ahmedabad. What is the intended use by him? His business is to construct the commercial complex or residential complex and send those residential complex to the customer later on. But there is a process involved. Itself is more than 1 year. So in the case of construction company or high-tech company or such industry, the period of 12 months is not applicable. His primary purpose for being traded, that's what I said. Anil Bakay, primary purpose to be traded by him, due to be realized within 12 months after the reporting date. Due to be realized means within the next 10 months you are supposed to get the money. It may be cash or cash equivalent. So firm may have the cash in hand, or they have made a fixed deposit with a banker for 364 on next days. Then it is known as cash equivalent. Because at any point of time they can go and they can withdraw the fixed deposit. What the words I am using, 300 fixed deposit up to 364 days from the reporting date of the financial statement. So when the financial statements are prepared by the company as on 31st March 2021, then any fixed deposit which is going to be mature before 31st March 2022 will be covered under the cash equivalent. Or there is some money paid by company to some subsidiary company or some party who is going to be make the payment within the 31st March 2022, you are going to receive back, then it is covered under current asset. Non-current assets are held for long-term purpose. Like when we say that as an individual, when we purchase the sand form, our intention is not to send it within the 1 year or to replace it within the 1 year. But our primary intention as a normal human being will be to use it for more than 1 year. So it is held for long-term purpose and is covered under plant and machineries. So furniture fixtures. So we are trying to classify the assets into two ways. Number one, it's touchability, that can be touched and seen or not. Then we say it as a tangible asset, intangible asset. Second side, we are looking it from the time parameters. Then we take it as a current assets or non-current assets, that is the fixed asset in normal words. Now we come to the second word, liabilities. What is the liabilities? Liabilities are basically the obligations we have to satisfy in the financial natures, obligations. Like, now take the example that you are grocery shopkeeper. Customer came, given you 500 rupees, and you have to give certain grocery item. So your obligation is to provide the goods asked by the customer. If you are unable to do it, you have to refund them. If you take your healthcare sector, then the customer have entered, patient have entered into the system. His patient's family member who is your customers. Understand, here also the very important point is coming. Unities of the patients become the customer. So unities of the patients have deposited 1 lakh rupees and decided that you provide the services to us to cure our family member. Now, if assume within the 2-3 minutes before the patient have been taken into the treatment finish, he expired. Then morally ethically, healthcare sector is supposed to give you the 1 lakh rupees back. Or that is one way where patient immediately answer. Now let us assume that your patient being in the hospital in few days and so. Then doctor have taken the 1 lakh rupees fees in advance the money from you. So he will not ask for, he will ask for more money when 1 lakh rupees comes to the nearby. Means usually that is happened. And assume that the patient have been renewed and 60,000 rupees been is happened, then hospital will refund you the 40,000 rupees. So it is an obligations of the financial nature. It is to be settled in future date and from owes to other parties. This is basically known as the liabilities being happened by the firm. Liabilities are going to be of the one type only that we understand. Liabilities does not have the touch and say. Okay? Liabilities are bifurcated into one category only, that is the short-term liabilities and non-short-term liabilities, which is known as current liabilities and non-current liabilities. Current liabilities are to be settled by you in the normal operating cycle of the firm. What you understand easily and what I already explained to you, that is happen on a normal parameter, settled within normal operating cycle of the firm, which means within the next one accounting period, from the end of the period or at the end of the period, or it may be covered under the normal business cycle. Okay. Number two is held primarily for the purpose of being traded by you. That is our already we discussed about it for asset. To be paid, to be settled within the 10 months after the reporting date. So financial statement of the 31st March 2021 record the amount to be paid before 31st March 2022. So now here coming to the point that you have taken the housing loan. Assume you are talking from the office loan, okay? Not housing. You have taken the office loan of 15 lakhs rupees and you have to make the principal repayment of 75,000 rupees during the year 2021-2022. Then that is covered under the current liabilities. So 75,000 rupees will be covered under the current liabilities, and under the non-current liabilities we are going to be taken into consideration the 14 lakh 25,000, because 14 lakh 25,000 rupees to be paid later on by you. This is what I said, current liabilities and non-current liabilities. Now I use the words worth. I already said. Own asset is not your worth. We have taken the example that 25 lakhs rupees your apartment is your asset. 15 lakh rupees loan is taken by you. So it's your liability. So your worth is 10 lakh rupees. So here is mentioned that asset, where I shown the some machineries of the company minus liability, here bank is shown, equal to net worth. This is very important. How the is equal to net worth, let us understand. assets, net liabilities is equal to net worth. We have come to that. So now we say how net worth is being done by considering a number of microparticles have been combined together. So before we come, when we say the net worth, I already said business is separate from its owner. Number two. So business is separate from its owner. So it is known as business entity concept. Second example, I have said that you are going to the Ahmedabad and looking the some of the shop which is 150 years old, managed by 32 or 33 years person. So what it indicates that business is separate from its owners. So that is business entity concept. Number one. Number two, there is going to be the 150 years, means longevity of the business. Or in another word, we can say that it is assumed that business is not started with an intention to close down. Grandfather will give the business to grandfather, grandfather will give the business to father, and father gives the business to his children, and this way the sequences goes on forward. But when the grandfather has started the business, there is some capital is originally invested by him. So that is known as equity capital. There is going to be the grandfather, father have kept the money in the business, not taken to the home. That is known as reserve. So they can say, normally गुजरात में लोग कहते हैं कि हम अहमदाबाद में आए थे और हम बॉम्बे में आए, we started our business, हम लोग एक नौती लेके आए थे और इतना बड़ा बिल्डिंग बना दिया. Okay. So that is reserves. Third, when as an individual person at a particular decision making level, taking the decision to retain the profit in the business, that is known as undistributable profit. Fourth, number of times it happened that government provide the non-refundable subsidies. Like the government of Gujarat have introduced before few time ago that any company who is establishing the solar plant will be getting 1 minute. I will switch on my laptop connection because electricity is coming into problem. So friends, I have to take a break few seconds because to start the charging. Non-subsidies are going to become. So the non-subsidies are showing you that how the business is being working. And that non-subsidy is going to be played a major role for you. That is the money you receive, or you now take a very simple example to the individual level. Your father have given the 20 lakhs rupees, so that is your capital, which is considered as a one type of the non-refundable money. Agreed? Because this is normal culture in India that father have given the money, you are not bound to repay it. so it is non-refundable money. Then you have done the job for few years. So when you have done the job for few years, you have the 5 lakh rupees equity capital was with you, or 5 lakh rupees saving was with you. So 20 lakh rupees given by your father to start the business, 5 lakh rupees capital is taken by you. So you have the 25 lakh rupees. Then you work for the 2 years time. When you work for the 2 years time, you are getting the subsidies. Sorry, you are getting the profit kept by you in the business for 2 years. That is known as reserve. And this year, whatever profit have been happened, you keep it in the business. That is known as undistributed profit. So this is known as internal liabilities of the firm, because firm is separate from its owner. So when the firm have to owe the money, or when the firm have to pay the money to the outsider, it is known as liability. When the firm have to pay the money to the owner only, it is known as net worth, or is also being known as the internal liabilities. Now, we come to the point. What is the gross working capital? Gross working capital. Gross working capital is equal to total current assets minus liabilities. So when we say my total current asset equal to my amount knocked in fixed assets equal to long-term liabilities, long-term debt. Long-term liability means debentures are taken, bank loan is taken. Long-term debt means you borrow some money from minorities or something. Current liabilities means which we have to pay within the next month time, minus amount knocked in the fixed asset. So I can say that I have borrowed the 13 lakhs rupees for purchase of the plant and machineries, and 2 lakh rupees is my current liabilities for the supply of goods. So what is my total liability? 32 lakhs. But out of this 32 lakh, I have purchased the office building and furniture of 25 lakhs rupees. So 7 lakh rupees is your total current assets. That is known as gross working capital by you. Now we come to the contingent liability. The point at which I will be stopping. Contingent means something to happen. So it is your potential obligations to make the payment. So it is created or depends on the outcome of an event. That is known as contingent liability. Now, those contingent liability, let us come to the example. Against firm negotiation and no obligation is created immediately. Assume that your shop, you are getting every year annual maintenance, AMC tax bill, Ahmedabad Municipal Corporation tax bill, rupees 20,000. But this year you have received the annual AMC tax bill of 30,000 rupees. So you went to the sum upping, and that lawyer have said that there is a very rare chances that you have to pay the 30,000, because your argument and our conditions are clear, where 20,000 rupees is correct. So we are going to win it. So as an individual, you will be making a 20,000 rupees payment to the municipality in protest, and penally you will put a case against them. So no obligation is created immediately. But in the back of your mind, or as an individual, you will not be consider it as your liability, but somewhere you make sure that it is in your mind. You will, or you may be record it in some diary that there is a this particular lawyer have been appointed by us, and we have to make a payment of 10,000 rupees in case if we do not succeed in the case. So it is disclosed by way of a note to the financial statement, or in our books of accounts we will be recording it as a liability of the firms. So friends, this is what we try to do it. Now I am saying that it's a potential obligations created against firm negotiate, no obligation created,